This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra. The big story coming in early morning today. US President Donald Trump calls the trade deal with India historic. Also says that tariff is now his 5th favorite word. Also on the show, we'll bring you a perspective from Rohit Srivastav on this trend which is visible that potentially equity mutual funds are losing steam. Is this something to worry about? We'll tell you on the show. And finally, the big day. It is February 12th and Bangladesh goes to polls. All eyes are on which way Gen Z is going to cast their ballot. All this and more on this edition of Morning Brief at 9. This is Morning Brief at 9 this Thursday morning. Here are the headlines we're tracking for you. US President Donald Trump tells Israeli Prime Minister Benjamin Netanyahu at the White House that talks with Iran must continue, pushing back against calls from Tel Aviv for a tougher line on Tehran. Lawmakers in the Republican-controlled House vote to overturn Donald Trump's tariff on Canadian goods, brushing aside his warning of political consequences and delivering an unusual setback to his signature trade policy. The U.S. House votes to require proof of U.S. citizenship in November's midterm election, a move that Democrats warn could burden voters and reshape electoral access. Instagram CEO Adam Mosseri tells California court users are not clinically addicted to social media as Meta faces a landmark trial over claims of triggering online addiction among children. January U.S. hiring accelerates unexpectedly. Unemployment rate dips to 4.3%, giving the Federal Reserve room to hold rates steady as it watches inflation trends. French President Emmanuel Macron says Europe must stand as an independent global force, warning that economic pressure from China and the United States demands strategic autonomy. The head of the World Trade Organization urges urgent reform, saying the current system cannot withstand rising geopolitical tensions and protectionist pressures. Dutch brewer Heineken announces 6,000 job cuts and lowers its 2026 profit outlook as global beer sales soften and cost pressures mount. And finally, Bangladesh heads to the polls for the first time since 2024 unrest, with parties one-sided under former leader Sheikh Hasina returning to the fiercely contested race. US President Donald Trump says no final decisions were made during his very good meeting with Israeli Prime Minister Benjamin Netanyahu on Wednesday, but confirmed that negotiations with Iran will continue despite rising tensions in the region. Netanyahu's office said the Israeli leader stressed his country's security concerns during the talks, even as Washington keeps both diplomacy and the threat of military action on the table following Tehran's crackdown on protesters. Now, in their 7th meeting since Donald Trump returned to White House last year, Netanyahu, whose visit was once muted, in fact more muted than usual, was looking to influence the next round of U.S. discussions with Iran following nuclear negotiations held in Oman last Friday. And in a politically charged move ahead of U.S. midterm polls in November later this year, the Republican-controlled House has passed a bill requiring proof of U.S. citizenship to vote in federal elections. Now, supporters call it a safeguard for election integrity, while Democrats warn it could create new hurdles for millions of eligible voters. The legislation now heads to the Senate, where similar efforts have stalled before. Listen in to House Speaker Mike Johnson.
House Republicans tonight stood with the overwhelming majority of Americans who demand secure elections. Ensuring the integrity of elections is an essential issue. It's essential to maintaining our constitutional republic, and everybody in this country seems to understand and agree to that. This is about a 90-10 issue in the polling, because all that we've done tonight in this simple piece of legislation is apply common sense.
Moving to corporate news now, in a major development from a high-profile courtroom battle in California, Instagram CEO Adam Mosseri took the stand on Wednesday and firmly pushed back against claims that social media platforms can cause clinical addiction. Testifying in a groundbreaking trial, Mosseri rejected the idea that users, especially young people, could become clinically addicted to Instagram or similar apps. The case, now unfolding in Los Angeles, puts Meta, the parent company behind Instagram and Facebook, along with Google's YouTube, in the hot seat. Plaintiffs argue these tech giants deliberately engineer their platforms to hook children, turning them into profit-driven dopamine machines that contribute to serious issues like depression, eating disorders, psychiatric crisis, and even suicide among vulnerable youth. Mosseri became the first top Silicon Valley executive to face the jury in this landmark proceeding, which could set a major legal precedent for how or if social media companies can be held accountable for harming children. On to U.S. economy now. U.S. job growth picked up pace in the month of Jan and unemployment fell to 4.3%. Fresh signs of labor market resilience that could give the Federal Reserve room to keep interest rates steady while tracking inflation risks.
U.S. job growth accelerated in January and the unemployment rate fell. The non-farm payrolls report from the Labor Department showed signs of stability that could give the Federal Reserve room to keep interest rates steady, while policymakers monitor inflation. The release of the report was delayed a few days by the recent partial government shutdown. Employers added 130,000 jobs last month, nearly twice the estimate of economists polled by Reuters. The report also showed the unemployment rate fell to 4.3% from 4.4%. But revisions showed the economy added only 181,000 jobs in 2025, instead of the previously estimated 584,000. Economists say President Donald Trump's aggressive trade and immigration policies continued to cast a shadow on the labor market, cautioning against viewing the surge in payrolls in January as marking a material shift in conditions. Kayla Brune, head of economic analysis at Morning Consult, says custom indicators her organization tracks on unemployment and income show worrying signs.
Both of those metrics showed a spike in the second half of January. For the lost pay and income one, we'd actually seen this upward trend begin in late 2025. But what changed in 2026 is that it spread from more just the lower income group who were more isolated and kind of experiencing tougher economic conditions. It spread to hit the high income group. And that's kind of ringing alarm bells for me because of what we've seen with the K-shaped economy and because of how important that group has been for driving overall economic growth.
Healthcare employment increased by 82,000 jobs in January, more than double their monthly average in 2025, leading some economists to conclude that January's increase was a fluke. The construction industry added 33,000 jobs, driven by hiring of non-residential specialty trade contractors, attributed by some economists to data centers needed to power artificial intelligence. Construction employment was virtually flat in 2025.
And on to Wall Street now. U.S. markets ended little changed on Wednesday as investors balanced optimism about economic strength with concerns that robust data could slow the pace of Federal Reserve rate cuts. The Nasdaq and Dow dipped slightly while the S&P 500 closed flat. Take a look.
U.S. stocks were muted on Wednesday, with the Dow ticking down slightly, the S&P 500 unchanged, and the Nasdaq nudging lower. The indexes had started the session on a strong note, with the S&P 500 and Nasdaq hitting their highest level in more than a week after the closely watched non-farm payrolls report showed much faster than expected job growth in January, while the unemployment rate fell to 4.3%. But the gains subsided as traders dialed back bets on interest rate cuts from the Federal Reserve, explains Alexander Morris, CEO and Chief Investment Officer at FM Investments.
Looking backwards, this is a certain market improvement versus where we were, and this certainly caught economists who were being surveyed by surprise. In general, though, we do know the labor market has overall softened. So one really strong report is just one really strong report. This has been delayed, and it has some question as to whether or not all of the data was collected in all the usual ways. So I think this is a great sign for the economy. Not a great sign if you were hoping for 3 or more rate cuts to come in the near future.
Investors will now be laser focused on the January Consumer Price Index inflation report due on Friday. Among Wednesday's stock moves, technology was a mixed bag, with chip stocks rallying sharply and software stocks tumbling to snap 3 sessions of gains after last week's steep sell-off sparked by fears of AI-fueled disruption. Microsoft lost more than 2% and was the biggest drag on the S&P 500, followed by Alphabet, which shed almost 2.5%. Leading declines in the financial services sector, shares of Robinhood tumbled nearly 9%, after the retail brokerage missed fourth-quarter revenue expectations. And shares of power equipment maker Generac rallied about 18%, making it the S&P 500's biggest percentage gainer, despite missing fourth-quarter profit and sales expectations. But the company said demand from data center customers continues to strengthen, with rising orders from hyperscalers expected to lift Generac's backlog in the coming quarters.
French energy giant Total Energy says it will halve share buybacks in the first quarter as weaker oil and gas prices offset strong refining profits and gains from renewable asset sales. Take a look.
French oil giant Total Energies will halve share buybacks in the first quarter. The firm said Wednesday it will lower its first quarter buyback to $750 million worth of shares, echoing similar moves by peers. Total had previously kept buybacks at $2 billion per quarter since mid-2022 and repurchased $1.5 billion in shares in the fourth quarter. The announcement came as the energy major also reported a fall in fourth quarter net income. It was down to $3.8 billion from $4.4 billion a year earlier, below analyst projections. Low oil and gas prices cancelled out soaring fourth quarter profit from refining fuels and proceeds from renewable assets stake sales. Total said it ramped up oil and gas production to compensate for a big drop in both Brent crude and liquefied natural gas prices. However, earnings for the refining and chemical businesses surged by 215%, reaching $1 billion. Total has previously said margins at European refineries during the period jumped 213% compared to the previous year. The company's CEO had attributed the increase to US sanctions on Russian providers and an EU import ban on fuels derived from Russian oil.
Staying with Europe, Dutch brewer Heineken plans to cut up to 6,000 jobs globally and has lowered its profit growth outlook for 2026 as weak demand weighs on the beer industry worldwide.
Heineken said Wednesday it will cut up to 6,000 jobs from its global workforce. It makes up almost 7% of the firm's workforce and comes as the company and its peers face weak demand. The Dutch brewer also set lower expectations for profit growth this year on Wednesday. It expects expansion of between 2% and 6% against the 4% to 8% growth it guided for last year. The world's number 2 brewer by market value is currently searching for a new CEO following the surprise resignation of Dolf van der Brink in January. The maker of Tiger and Amstel, alongside its namesake lager, has promised to deliver higher growth with fewer resources, a move it hopes will reassure dissatisfied investors who say it has fallen behind on efficiency. Sales across the sector are faltering amid strained consumer finances and more recent bad weather. Rival beer and spirit makers are also cutting costs, selling assets and slowing production after years of slow sales. Alcohol makers also face long-term threats like rising health warnings, competition from alternatives, and disruptions like weight loss drugs.
And on to Asia now. In a dramatic turning point for Bangladesh's political future, polling stations opened across the country on Thursday for a highly anticipated parliamentary election, the first since a massive student-led uprising forced longtime Prime Minister Sheikh Hasina from power in 2024. Now, election officials say counting will start almost immediately after polls close, with initial trends possibly emerging around midnight and full results expected to become clear by Friday morning. The vote is widely viewed as a make-or-break test for the nation's fragile return to democracy following years of upheaval, including the dramatic collapse of Hasina's government amid widespread protests. And from rising fears of both an AI bubble as well as AI displacement to fresh leadership turmoil at Elon Musk's XAI, here's a roundup of the biggest stories driving the artificial intelligence revolution this week.
From jittery Amazon investors to yet more co-founders quitting XAI, this is AI Weekly. Amazon investors were jittery about a so-called AI bubble. Shares plunged as much as 11% after it projected a surge of more than 50% in capital expenditures. The e-commerce giant plans to pump $200 billion into its AI efforts this year, but that has some market watchers worried about returns on the investment. Sources have told Reuters ByteDance is developing an AI chip, and they said the Chinese firm is in talks with Samsung to make it. The TikTok parent wants to secure a supply of advanced processors. One source said ByteDance plans to produce at least 100,000 units of the chip this year, and it will be designed for AI inference tasks. XAI co-founders Tony Wu and Jimmy Barr have resigned. They didn't say why they're leaving, but it leaves Elon Musk's firm with just half of its 12 co-founders. Wu and Barr started the company with the billionaire Tesla and SpaceX CEO less than 3 years ago. The Financial Times reported Barr resigned due to tensions within its technical team over demands to improve its AI model performance. A Silicon Valley giant once again found itself in hot water with the European Union. EU regulators threatened Meta with temporary restrictions to stop it blocking AI rivals from its WhatsApp messaging service. It would come while they investigate suspected abuse of a dominant position by the US tech giant. Meta said there was no reason for the EU to intervene. And robotics company Robco has raised $100 million from major backers like Volkswagen and Exor. The German firm is working to advance so-called physical AI technology and wants to expand in the US. Roman Holzer is the company's co-founder and CEO.
Physical AI to us at Robco is the application of AI in the physical world. So for us concretely, that means in the manufacturing environment, in the industry, in production environments.
Robco specialises in modular systems aimed at industrial automation tasks like pallet stacking and component engraving.
All right, and fresh news coming in early morning this Thursday morning. US President Donald Trump has hailed the newly concluded India-US agreement as a historic trade deal, saying it would expand American energy exports, especially coal, while strengthening economic ties between the two countries. He added that the pact is expected to deepen bilateral trade engagement and open new avenues for cooperation across key sectors. Listen in.
Have a new group of people that we're very close to, become very close to. And let's go Venezuela, where we're taking in this case, oil. We had 50 million barrels of oil that we have floating right now to Houston to be refined. And we're getting energy from all different sources. And so oil and gas is fantastic. So many of them are so good, but we're not going to use the bad ones. America is now the #1 energy producer in the world. We are by far #1. In fact, we're very soon going to be #1 by double what #2 is. And under our leadership, we're becoming a massive energy exporter. In just the past few months, we've made historic trade deals with Japan, Korea, India, and others to increase our coal exports dramatically. We're now exporting coal to all over the world, and the quality of our coal is supposed to be, I'm not an expert in coal, but I've been very good to the people that are. The quality of our coal is supposed to be the finest anywhere in the world. From West Virginia to Wyoming, from Ohio to Montana, and all across the country, we're lifting up our hardworking American miners like nobody has ever done before. We're bringing down costs of American consumers, and together we're making the most of the magnificent land that God gave us to rebuild the greatest economy and the greatest nation in the history of the world.
And Trump also went on to say that the role of tariffs in shaping the agreement, and also saying that tariffs are now his fifth favorite word. He claimed that trade measures had led to a 78% reduction in trade deficit for the United States. Trump also argued that tariff policies were key to protecting domestic industries while pushing for more balanced trade between the United States and his partners. Listen in.
Another one of my favorite words is the word tariff. You know, tariff is very, I know they want to hear that little story. I used to say it's my favorite word. They said, what about God? What about religion? What about family and your wife, your children? So now I make it my fifth favorite word. Oh, you have no idea. I suffered. Kayla, I was suffering from the fake news media. They were going after me when I said it was my favorite word. So I make it number 5, and I think I'm generally speaking okay. They'd like it to be a little bit later than that. But because of tariffs, you saw that it was just announced, our trade deficit has gone down. Now, if you go down 1 point, 2 points, you're like a genius. It's gone down 78%. 78%. Can you believe it? And we have to fight. Right, Speaker? And we have to fight. Just came out. Everyone's saying, that can't be right. 78% reduction in our trade deficit. And next year, we're going to be positive if we keep it all going. We're waiting for a very important decision from the Supreme Court. But I want to thank the speakers here because you have fought with me. You got it very early. Now almost everybody's getting it. But it's numbers that we've never seen. The other thing is breaking 7,000 on the S&P, and very importantly, 50,000 yesterday. 50,000 we broke on the Dow. And if you remember, when I won, they said if he could ever produce 50,000 by the end of his 4th term, by the end of his 4th year, it would be unbelievably successful. Well, we produced 50,000 in excess now, went up today, in excess of 50,000 at the end of my first year. So that's some difference. And that's because of tariffs. So we're doing numbers that nobody thought were possible. The economy is rich. I tell the story that in Saudi Arabia, the king said, you know, sir, a year and a half ago, we were all saying you were a dead country, and now you have the hottest country anywhere in the world. That's true. We're the hottest country anywhere in the world. And a lot of...
All right, Donald Trump there calling it the hottest country in the world, and tariffs now his fifth favorite word. We will slip into a very short break. When we come back, Indian stock markets have opened on a muted tone this morning, and we're also seeing a massive sell-off in tech stocks. But more importantly, a trend that should we worry about or not. Rohit Srivastava will join us on the show to tell us what to make of Amphi data, which suggests that equity mutual fund inflows have been on a decline. That on the other side of the break. You're watching Morning Brief at 9.
वकील साहब अच्छी खासी प्रैक्टिस है, नया फील्ड में क्यों जाना?
सिस्टर देश का सोच रहे
और इसके फ्यूचर का नहीं सोच रहे।
SBI लाइफ से अपनी बेटी का फ्यूचर सिक्योर है, तभी तो इनको अपने इरादे पूरे करने का राइट है। करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ अपने लिए, अपनों के लिए।
दूरियां कोई अपनों में ना रहे, दिल में जब उमंग हो, घर है वही जहाँ सब संग हो, रिश्तों को रंग दो, दुनिया को रंग दो।
बिरला ओपस पेंट्स।
back. You are watching News 9. This is Morning Brief at 9. First up, let's bring you a check on the data coming in from the markets, which opened just a few minutes ago, and it seems that there is a broad-based correction visible in both the Sensex and the Nifty this morning, and not far behind is the trend actually even on the mid-cap and the small-cap space. In fact, small caps and mid-caps beating pretty much the Sensex and the Nifty when it comes to negativity in the market this morning. Volatility in the Indian stock market continues to be low at about 11.5. As things stand right now, Nifty 50 is down from that 25,900 plus levels, and the aspiration was that maybe the 26,000 level can be breached today, but early trends, at least in the market, suggest that that there is in fact a decline, and Nifty 50 now at about 25,850 odd level. Sensex also a good 130 odd points below that 84,000 level. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are adding the pain in the market this morning, and it seems that it is the IT sector, of course taking cues from what we saw on Wall Street, and the sell-off that we saw in tech stocks yesterday seems to be casting its own sort of ripple effect here on the Indian IT stocks. But TCS, Infosys, HCL Tech, pretty much all three losing more than 3% or so in trade early morning today. Infosys worst hit, down about 4.5% or so. TCS meanwhile down about 3.7%, and HCL Tech also down about 3.5%. Tech Mahindra pretty much taking similar cues, down about 3.8%. So the real pain that we're seeing in the market this morning seems to be coming from the knock-on effect of what we saw in the US yesterday, taking its toll even on Indian IT stocks. Meanwhile, SBI is pretty much in flat territory today. In fact, some correction in the SBI stock. That stock is down about 0.25 percentage point or so. Let's try and put this into perspective, especially with news coming in that SBI, with the massive rally that we saw, has now pipped TCS to become India's fourth largest company. Rohit Srivastav joins us, founder of IndiaCharts.com and a market strategist. Rohit, thank you so much for your time. First up, interesting sort of movements that we are seeing in the markets, and now we have SBI after its fantastic rally post Q3 results, pretty much pipping TCS to become India's fourth largest, fourth most valuable company. What do you make of this sort of change in dynamics at a time when the entire world is gravitating towards artificial intelligence, but India's IT sector is facing headwinds on the same account?
So software stocks, if you look at the Dow Jones or the Nasdaq software index, it's actually been falling for several weeks, somewhere since the 25th of December. So it's not that it just happened right now. It's just that the Indian IT sectors, started taking a beating more recently. And that is why we are beginning to observe this breakdown. I don't think it's over. It's still continuing as far as global markets are concerned, this move away, and it's being caused because of IT, because of the new technologies and the risk that people are assessing in terms of what it will mean, for business, for how many employees you're going to hire. There's going to be a rub-off effect on various parts. It may not be today, but the markets try to discount things ahead of their time. At the same time, there's also a shift happening where people are beginning to buy industrial stocks. And that is why when you actually look at some of the core sector indices, even in the US, whether it's the Dow Industrials, oil and gas, transports, these sectors actually moved up while the selling has continued in the tech sector. Now, the interesting thing to watch will be whether something similar happens here, and SBI is probably one of the cases where you've actually had decent earnings numbers which have matched expectations, unlike some of the other PSU banks, which is why it's standing out in that space. And you may see this rotational performance because, as money gets out of IT, it's got to go somewhere. And that is the bet that people will try to take, where's the growth, and, money gets allocated to where the growth is, or else you search for value.
All right. Of course, value search continues to be pretty much, the boon and the bane when it comes to investors, especially retail investors. But overall, if we were to look at the big five again, Reliance Industries, HDFC Bank, Bharti Airtel, as well as now TCS and SBI, how do you view pretty much, the big five when it comes to India's stock market, the five most valuable companies? What kind of asset allocation should investors look at doing, or should some of these be avoided right now, especially the likes of TCS?
So TCS and the tech space for sure, we do have a negative view on TCS that we've published yesterday, and we are looking at further downside, and generally in the IT sector as well. So that's definitely an avoid. HDFC Bank would have been an interesting play. It has, given, short-term moves over the last year as banking stocks came back into the limelight, but it's not, the performance has not been something which is, outstanding. Probably within the private banks, Axis Bank has done far better. So in that sense, again, HDFC Bank not standing out means that we don't want to, really allocate there yet till it shows that kind of strength and momentum. Reliance Industries then is related to the commodity sector. The commodity sector has, been sort of flattish. Oil prices also have, really not taken off due to a lot of excessive production that's happening globally. So that will keep, growth momentum somewhere on the slower lane. So, out of all these stocks, I think the one that is probably standing out has been Bharti and SBI. I think those are the two that stand out of the names that you really mentioned.
Right.
And that's probably where the allocation also has ended up happening.
All right. So it is likely to be Bharti and HDFC Bank where the allocation has mostly gravitated, as well as SBI, of course, which you just mentioned, Rohit. But moving to another trend, Rohit, which is closely linked to the data that we are seeing is around equity mutual funds. And the inflows have declined as much as 40% to about 24,000 odd crore rupees from a record that we saw in July of about 42,000 crore rupees in July last year. Now, while the graph tells us that the decline has been gradual, the pattern seems fairly definitive. So, has there been some sort of a reason why you feel that equity mutual funds are now not really making the cut when it comes to investors wanting to park their money? Because, of course, returns haven't been great, but SIP data tells us that, nobody has really paused their SIPs, and SIPs, if anything, are only growing. But why is it that investors are not looking at equity mutual funds as a category?
So, well, a lot of the SIP money would go into equity mutual funds, but I think what you're referring to is the direct investors who tend to be more active managers, which means they decide based on the current pattern whether they should increase their allocation or not. And I think since the trade deal went off, as you see your data cooling off from July, that's when the trade deal went into a limbo. And that's when you have seen flows actually slow down. Returns are, of course, the main metric that they look at. So we've seen that kind of pattern even in several portfolio management schemes where if the 1 year, 2 year returns have been dismal, people have started to withdraw funds, and that's a pattern to really think about. If the markets don't pick up, meaningfully and start generating positive returns, people would start thinking of allocating away to other asset classes. Whether it's precious metals or whether it's going back to good old fixed deposits. Those become the or even people have looked at arbitrage funds so much, though the returns slow down a little bit with the STT, but those are alternate investments that people start considering in times like this.
Right. So, in fact, that is what the data from gold ETF also tells us, because gold ETFs in the same period have seen, especially, not just the trend line, which is on the incline. Just look at the graph for the month of December, followed by the month of Jan. Gold ETF is something which seems to have attracted a lot of retail direct money. So, is this trend likely to continue? What I'm trying to arrive at is that we've seen that markets have not given the kind of returns that commodities have in the last 1 year. But now that all these variables are pretty much knocked out of the equation, we know that we have a trade deal in the works with the US. The framework agreement has been signed already. Where does the story go on from here? Because you're just in the second month of this calendar year. From here, do you see some sort of push back towards equities, or do you think gold is going to continue to rule the roost for the next few months?
So there is a case for equities to do relatively better than gold and silver, and that's based on the 20-year data of the Sensex to gold ratio. When we actually look at that, then we are at the bottom end of the range. We've moved up and down in this range for 2 decades since 1992. Every time we've been at this level, the shift has happened from precious metals towards equity. So that is the simplest explanation we can give. But do remember that it's a relative ratio. What the ratio really suggests is that one asset class would do better than the other. This can also happen if one asset class goes down, like we've seen ferocious buying in gold and silver. If gold prices do drop, below 4,400, that would sort of look like the performance is changing or turning down. And that can also drive, money back into equity. So you would see the relative performance improve just if, precious metals stop performing. And that's probably a likely case more than anything else, because the run-up that we saw in precious metals pushed some of their monthly indicators also to the highest in like 10 to 20 years. So it was pretty ferocious. And when you've seen that kind of buying, then it does take quite some time to get that performance back. So clearly, precious metals are not likely to continue their outperformance against equities during 2026.
Right. There was also data last year, if I'm not mistaken, Rohit, correct me if I'm wrong, which suggested that a lot of retail investor liquidity got sucked out because of IPOs, and that could have potentially also withdrawn the kind of inflows that we had that we could have potentially seen in the equity mutual fund category. But again, this year, given that markets continue to be a little volatile and not offering the kind of lifetime high headlines that it used to, till 2024 or so, but what we are seeing that there isn't as much traction when it comes to IPOs this time around, and Fractal's analytics IPO being, one case in point, because the first 2 days of the IPO opening were absolutely flat, and we didn't really see as much participation coming in either from retail investors or, for that matter, even from QIBs. We only saw that the subscription reached that 2.5 times level in the final day, the third day of the IPO, and therein as well, even the employees, which their quota was subscribed to just about 61% or so of the 2,800 crore rupee IPO. So overall, how do you make the IPO season and this year 2026 when it comes to IPOs, because we have big ticket IPOs even like NSE and Flipkart on the table?
Yeah, you're right. So if markets don't really go down too much, it creates room for IPOs to come in. I mean, we've seen it last year, even though we had so many geopolitical risks. As long as the indices remained above 24,000, 25,000, we were able to bring in a large number of IPOs, and they got subscribed because investors need to put their money somewhere. And as you saw, they ended up putting it in precious metals and many of the IPOs that came to the table. So they will look for alternate areas to invest as long as markets are flattish and not going anywhere. What usually makes the IPO market difficult is if the markets themselves fall significantly, and then people stop applying for IPOs. So that's not the environment we are in yet. We'll have to see how that is, but definitely there are big names like the NSE IPO, which has been pending for a long time, waiting to come to the market, and they would really need a good environment to be able to sell at the prices that most people are hoping for.
But subscribing to IPOs for retail investors, beyond, of course, that just being a bet and a lucky draw on whether they will get the allocation or not, is that a strategy that retail investors should pursue in 2026, given that overall the sentiment across the broad-based stock market seems flattish?
It's something that I don't do. My first investment in the stock market in 1992 was an IPO. And that was the last IPO that I've ever applied for. But
which IPO was that, Rohit?
It was some wild company known as ATV Projects Limited.
Okay.
And after that experience, what we really realized is that IPOs, when they come in, especially in those days, they would be companies which would be equivalent to startups. So you are actually betting on somebody being able to deliver business. Now, today, because of a lot of the regulation, most of the IPOs that come to market end up being businesses that are already sort of established, and you're betting on two things. One is listing gains, and second is long-term growth. But most people end up playing the listing gains game, which is fine if you're just getting in and getting out. And the moment it stops working, you probably stop playing that game. So it's purely trading, I would say. It's not even investing. When it comes to investing, I usually prefer to let the company get listed. Let its value actually be, get the true value of what the market thinks it's worth, and then actually take an investment call.
Okay, all right. So, of course, wait for listing, wait for the true value discovery before you participate. Of course, this is first-hand sort of experience sharing from Rohit, who invested in his first IPO back in 1992. But Rohit, if there is so much volatility, so much uncertainty, which is likely to loom all over 2026 as well, do you think we should then more seriously consider parking some money, let's say, in the US stock market and look at these big tech companies, the NASDAQ-listed companies, and use, let's say, the same buy-on-dip strategy like we're seeing Google and Microsoft are both down about 2% plus or so? A good opportunity for Indian retail investors then to look at the US tech story.
Only where you're certain that, these are companies that will not be hit by the AI cycle. We know that this $500 billion that they're investing is still not clearly ROI positive, because we don't know whether the returns will come on the investments that they're making. So what is really happening is what I said in the beginning, is money is actually shifting away from tech to industrials and other economy related sectors, because that is where value is. So if you are really looking at diversifying away from all the noise that is happening here, look at value stocks in sectors that are being ignored right now. We've been chasing the same things. We probably need to look outside the universe we've been chasing.
And again, sticking specifically to the US story, now how would you rate, let's say, a stock like Apple or Nvidia? Would you call it a pure play technology stock that one should stay away from, or more aligned with macroeconomics, given that, data centers are being invested in, which require GPUs, more consumption leading to, and better employment numbers also in the US, leading potentially to more demand for consumer goods like iPhones?
Yeah, it's tricky because you see, US is a very highly, spending-driven market. If you, maintain the current rate of GDP growth, then companies like Apple tend to benefit from it because people are spending, buying phones, and that goes on. Nvidia is a very, very different bet. It's not a bet on the economy. It's really a bet on the demand for chips coming from the AI space. And there's so much changing there. There's even talks of whether the price of chips come down as new competitors step into the business. They may be in denial on that, and those are risks to getting into Nvidia at this point of time. Definitely, if there's a good correction, I don't think there's been a significant correction in some of these stocks recently. Maybe in some of the non-AI stocks, but Nvidia has not seen a very big decline. If it does happen that you suddenly get a 10-20% decline for some reason, yes, it would become attractive from a long-term basis. But right now, I'd rather just wait and watch what is happening there.
All right, wait and watch, and don't put your money unless you're absolutely sure of where to invest. Thank you so much, Rohit. We will leave it at that for this morning. And with that, we will slip into another very short break, but a lot more coming up on the other side of the break, especially when it comes to India's oil purchases and the global dynamics around that. Keep watching News9.
When drinking water turns deadly, it demands answers.
What is really going on there?
News9 brings you.
Imagine water that you drink.
Contaminated drinking water in Indore, revealing a disturbing link to at least 15 reported deaths.
Typhoid outbreak in tribal areas. 104 patients.
After 15 people were killed.
Foul, frothy water from taps.
You would assume it's safe. It turned deadly. How is that happening?
Different cities. One national crisis. Bharat. Quest for clean water. News9. In your interest.
Philippines.
Welcome back. You're watching News9. This is Morning Brief at 9. Russian Foreign Minister Sergei Lavrov said on Wednesday that no leader apart from US President Donald Trump has stated that India will halt purchases of Russian oil. Now, speaking in the State Duma, Lavrov said he had not heard such a position from Prime Minister Narendra Modi or other Indian officials. His remarks come after Moscow accused Washington of using tariffs, sanctions and other coercive measures to curb Russian oil trade with countries including India. Lavrov highlighted that energy security will remain a key focus during India's BRICS chairmanship, with President Vladimir Putin expected to attend the summit. He also said Putin's December 2025 visit to India strengthened the country's privileged strategic partnership, adding that Russia is ready to deepen ties further. Meanwhile, India has reiterated it will diversify crude sourcing based on national interest.
We don't see any grounds to think that agreements reached at the top level, reached by governments of the Russian and the Indian government, are at any kind of risk. You mentioned Donald Trump's statement that India agreed not to buy Russian oil. I haven't heard anything about that from anyone else, including from Prime Minister Modi or any other Indian counterparty.
Moving on now, while maintaining a fiscal deficit target of 4.3% of GDP, Finance Minister Nirmala Sitharaman said that the government has projected total expenditure of 53.47 lakh crore rupees for the next financial year, up 7.7% from the current fiscal. Replying to the union budget debate in Lok Sabha, she said tax receipts are estimated at 44.04 lakh crore rupees and capital expenditure has been given a record 12.2 lakh crore rupees allocation. Effective capex, including support to states, will rise to 17.1 lakh crore rupees. The centre has also enhanced 50-year capex loans to states under the Special Assistance to States schemes and reaffirmed its goal to reducing the debt to GDP ratio to around 50% by 2030-31. Listen to the Finance Minister.
Gross tax receipts are at 44.04 lakh crore in this BE. It's about 8% more than what was in BE of RE of 25-26, 3.26 lakh crores more than the RE. And if I were to look at the total expenditure, madam, for 26-27, it's at 53.47 lakh crores, so much more than what we receive as tax receipts. The capital expenditure is at 12.22 lakh crores, which is 3.1% of GDP and also 11.5% higher than the RE 25-26.
On to Motown News9 now. The automobile retail sales in India rose nearly 18% year-on-year to over 27 lakh units in the month of Jan, according to dealers' body FADA. The growth was driven by strong rural demand, supported by harvest income and wedding season spending, along with steady freight activity. Total vehicle registrations climbed to 27.22 lakh units compared with 23.14 lakh units a year earlier. Passenger vehicle sales grew 7% to over 5.13 lakh units, while two-wheeler retail sales, surged 21% to 18.5 lakh units. Three-wheelers and commercial vehicles posted gains of 19% and 15% respectively, and tractor registrations rose 23%. The FADA said two-wheeler demand is likely to remain strong due to improving rural liquidity and rising EV acceptance, though supply chain constraints and election-related factors could limit growth in some regions. The Directorate General of Civil Aviation has ended Indigo's temporary exemption from crew duty time rules, with the airline returning to full compliance with flight duty time limitations from Wednesday. The waiver, granted in December 2025 amid crew shortages, heavy travel demand and flight disruptions, was closely monitored by regulators. During the period, Indigo shared hourly flight data and regular operational reports, while aviation officials and flight inspectors tracked operations in real time. DGC has said the airline has now confirmed that rostering and monitoring systems are in place to meet statutory safety norms as normal regulations resume. And with CBSE board exams approaching, the Central Bureau of Secondary Education has announced a major change in its evaluation process. In a recent circular, the board said Class 12 answer sheets will be assessed through an on-screen marking system, while Class 10th evaluation will continue under the traditional manual method. Now, under the new digital system, examiners will check scanned copies of answer scripts on computers instead of handing physical papers. CBSE says the move will make evaluation faster, more accurate and largely error-free as the system automatically calculates totals, flags unchecked questions and reduces manual counting mistakes. The board believes the change will improve transparency and consistency in marking, especially for Class 12 students whose results are critical for university admissions. And on to the world of commodities now. Silver prices surged by 4,000 rupees to 2.68 lakh rupees per kilogram in Delhi on Wednesday, while gold climbed 600 rupees to 1.61 lakh rupees per 10 grams. Analysts said precious metals gained as markets increased bets on more aggressive US Federal Reserve rate cuts after softer economic data reflected slowing consumer demand. A weaker US dollar and rising geopolitical tensions also supported safe haven buying. Globally, silver spot jumped nearly 6% to over $85 per ounce, while gold traded above $5,078 per ounce. Experts warn that upcoming US non-farm payroll data could trigger fresh volatility in precious metals. And a big story now that came in yesterday, but just in case you missed it, the White House has revised its fact sheet on the US-India trade agreement, removing references to pulses and modifying language around digital services. The earlier document had listed certain pulses among producers where India would cut or eliminate tariffs alongside items like soybean oil, tree nuts and processed fruit. However, an updated version released later the same day yesterday no longer mentions pulses. News9 leaves you with this closer look at the changes in the fact sheet.
The White House has revised its fact sheet on the US-India trade agreement by removing the references to pulses. It has also altered the language around digital services. The fact sheet that had been released by the White House on Tuesday had explicitly mentioned certain pulses among the products for which India would reduce or eliminate tariffs. The statement had read, and I quote, India will eliminate or reduce tariffs on all US industrial goods and a wide range of US food and agricultural products, including dried distillers' grains, DDGs, red sorghum, tree nuts, fresh and processed fruit, certain pulses, soybean oil, wine and spirits, and additional products, unquote. The updated version of the document released later on Tuesday itself no longer carries any mention of pulses. The new statement reads, and I quote, India will eliminate or reduce tariffs on all US industrial goods and a wide range of US food and agricultural products, including dried distillers' grains DDGs, red sorghum, tree nuts, fresh and processed fruit, soybean oil, wine and spirits, and additional products, unquote. It is worth noting here that India is the world's largest producer and consumer of pulses that include lentils, chickpeas and dry beans. In order to protect the interest of Indian farmers, the Indian government has imposed a whole lot of tariffs on American exports in these categories. The revisions in the US fact sheet decisively point to the fact that New Delhi has been successful in pushing back on these characterizations. In addition to pulses, the US administration has also altered its wording around President Trump's claim about India's commitment to buying over $500 billion worth of US goods. Earlier version of the fact sheet read, and I quote again, India committed to buy more American products and purchase over $500 billion of US energy, information and communication technology, agricultural, coal and other products, unquote. The revised paragraph, however, does not refer to agricultural products. Furthermore, it even replaces the word committed with intends. The revised draft reads, and I quote, India intends to buy more American products and purchase over $500 billion of US energy, information and communication technology, coal and other products, unquote. Agriculture is a politically sensitive sector in India. It makes up about 20% of the country's GDP. A June report by McKinsey said India's agricultural market is worth $580 to $650 billion. It could grow to $1.4 trillion by the year 2035. President Donald Trump's office has also backtracked on assertions that India would eliminate digital services taxes. The earlier version of the text had read, and I quote, India will remove its digital services taxes and is committed to negotiate a robust set of bilateral digital trade rules that address discriminatory or burdensome practices and other barriers to digital trade, including rules that prohibit the imposition of custom duties on electronic transmissions, unquote. The revised version, however, reads, and I quote, India committed to negotiate a robust set of bilateral digital trade rules that address discriminatory or burdensome practices and other barriers to digital trade, unquote. These changes have come after Congress President Mallikarjun Kharge criticized the BJP-led central government. He had said the interim trade agreement with the US harms the Indian farmers, cattle owners, and even the textile sector. On the part of the government, after the deal had been announced, the central government had reassured farmers. Commerce Minister Piyush Goyal had said that farmers are fully protected. He had said India has not fully opened the farm sector. He added that sectors where India is self-sufficient are not part of the deal.
जिस प्रकार से हमारे किसानों के हितों का संरक्षण किया गया है, पूर्णतः संरक्षण किया गया है किसानों का, डेयरी का, उसको मद्देनजर रखते मैं मानता हूं ये जो यूनाइटेड स्टेट्स और भारत के बीच जॉइंट स्टेटमेंट कल देर रात फाइनलाइज हुआ, विश्व के समक्ष रखा गया, इसका देश के कोने कोने में स्वागत हुआ है।
When Trump captures Maduro, News9 breaks it first.
It's happening far away, but it has tremendous consequence for the world. What happens next?
Biggest international headline of the hour.
The US has conducted military strikes.
This is the Venezuelan president.
Maduro faces multiple charges, including narco-terrorism.
This is Maduro being taken to the New York court.
Donald Trump indicated that Greenland might be next.
Where will Donald Trump stop?
A dramatic U.S. operation, power shifts in Venezuela. High-stakes geopolitics unfolding. What does this mean for Venezuela? What does it mean for the world? And what comes next? On point with the facts, unmissable insights. In your interest always. Fastest alerts, hard facts, 360-degree analysis. From breaking news to deep dives, when the world changes, News9 leads. News9, always on top. When drinking water turns deadly, it demands answers.
What is really going on there?
News9 brings you
Imagine water that you drink.
contaminated drinking water in Indore, revealing a disturbing link to at least 15 reported deaths.
Typhoid outbreak in tribal areas. 104 patients.
After 15 people were killed.
Foul, frothy water from taps.
You would assume it's safe, it turned deadly.
How is that happening?
Different cities. One national crisis. Bharat. Quest for clean water. News9. In your interest.
Delhi is losing the fight against pollution.
This is not a story of just children. This is the story of every elderly person in the National Capital Region.
Delhi's hazardous air quality.
Smog capital of the world.
Delhi pollution has left us sick and exposed, also frankly embarrassed.
Hazardous air quality are disrupting daily life.
Growing issue of toxic air looming large over Delhi.
Delhi's air quality index has been hovering between 300 and 400 for the past week. The culprit was the same PM 2.5, the main pollutant which is emitted from heavy industries, power plants, vehicles, crop burning and coal-based heating.
The overall air quality of the city continues to remain in the very poor category.
We look at how Delhi is once again struggling with danger.
It's not just about today, it's about the future.
Ever wondered what makes the night come alive? Where flavors, lights and laughter dance in harmony. When the sun sets, stories rise. Of kitchens, cocktails and charisma. What makes your city's night so happening? Let's find out.
Good service, good food and a good location. You need to explore, you need to experiment.
But they will never forget how they felt when they came to your restaurant.
Being a chef, it's my priority to deliver taste in a plate with good presentation, unique innovation.
My definition of mixology would be to get people drunk in a safe and happy way. Don't drink on the job, that's for sure.
Mixology, you can play around with anything. You can create the stories, you can create the recipes.
Let's cheers on that note with our friendship.
Indulge in the finer things in life with Radico presents Lounge Nights. Discover the creme de la creme of India's culinary and nightlife scene. From trendy bars to exquisite restaurants, we've got you covered.
This is India's #1 news network, and you're watching News9, English news as it should be.
Bangladesh heads into crucial national elections today, the first since the ouster of former Prime Minister Sheikh Hasina, who has a 15-year iron-fisted rule. Clashes break out between Awami League supporters and police during small surprise processions in Dhaka and other major cities in Bangladesh. Trump claims US now world's #1 energy producer, says US made historic trade deal with Japan, Korea, India to increase coal exports dramatically. Finance Minister Nirmala Sitharaman takes on Rahul Gandhi over the budget, says he did not read the budget thoroughly, as that accused the centre of selling the nation, but it was Congress that sold India to WTO back in 2013. In a dramatic twist in Kanpur Lamborghini case, court rejects surrender plea of driver Mohan. Police say he was either wanted in the case nor had his name emerged during the probe. Meeting between US President Donald Trump and Israeli Prime Minister Netanyahu concludes. Trump says he insists Iran talks to continue, warns that he may act against Tehran if no nuclear deal is reached.